Okay, let's dive in. If you've been watching the markets lately, you've probably seen Palantir making some serious
Yeah.
waves. It's been on a really wild ride, lots of big swings. And if you're newer to investing, figuring out what's actually happening can be, well, pretty overwhelming.
It really can. There's just so much noise around stocks like this.
Yeah.
Separating the signal from the noise, especially when you're starting out,
Yep.
that's the challenge.
Exactly. So that's what we're doing today. We've gone through a whole stack of sources, articles, analysis, recent data, all focused on Palantir, looking back from 2022 right up to basically now June 2025.
Hmm.
Our goal is to cut through that noise, pull out the key insights, look at the ups and the downs, and really help you understand the main things driving this stock.
Okay, let's do it.
All right, so let's kick off with the positive side, the recent momentum, especially heading into mid-2025. The sources show Palantir hitting some significant new highs. We're talking like $137 to $139 reported around June.
Yeah, that's a big jump. And looking year to date, around June 11th, the sources said it was up over 80%. That kind of gain definitely gets noticed.
For sure. So what's fueling this, according to the materials? A huge piece seems to be their AI platform, AIP. There's a lot of market optimism about it.
Definitely. AIP comes up again and again. Businesses want AI solutions, and Palantir's platform is seen as a key way to deploy them. But it's not just AI.
Right.
Their government business is still very strong. Big contracts, Department of Defense. And there was mention in the sources of potential new deals, too, like with Social Security or the IRS. We're just relaying what the sources mentioned there.
Good point. And importantly, the sources also highlight growth beyond government. The U.S. commercial side seems to be doing really well.
Yes, one source cited, I think, a 68% year-over-year increase there. That's significant because it means less reliance just on government deals.
No.
It shows broader market acceptance.
And the financials look better, too. Q1 revenue was up strongly, like 39%.
It's exactly, hitting $884 million. And crucially, that marked their 7th straight profitable quarter.
7 quarters, yeah. That's a milestone. Shows the business model is maturing.
It does. And they raised their forecast for 2025, expecting about 36% growth, plus record operating income and free cash flow. Those are good signs about the business's health.
Okay, so solid business performance, AI, excitement, government strength, commercial growth. But the sources also mentioned this meme stock kind of characteristic. Lots of retail investor interest.
Yeah, there were reports of big inflows from retail investors, like $170 million mentioned. That kind of enthusiasm can really push prices,
Yeah.
adding to the volatility.
So that's the upside. Strong story there. But, and this is crucial, the sources spend a lot of time on the other side of the coin.
Right, then that's the valuation, the price of the stock. It's just very high.
High valuation. Okay, let's break that down simply. We see things like PE ratio around 210 to 265, PS ratio near 100. What does that mean for someone new?
Well, think of PE as the price you pay for $1 of the company's current profit. So 200 means paying $200 for $1 profit. PS is similar, but for sales, paying $100 for $1 sales.
And compared to average stocks.
It's dramatically higher, much, much higher than the typical S&P 500 stock. What the sources are saying is the price today already expects massive future growth, maybe even unrealistically massive growth.
So you're paying today for perfection years from now?
Kind of, yeah. It's baking in huge success. And that's why some analysts remain cautious, like Sedini keeping a neutral rating with a target below recent highs. Even though they see the good business performance, it's that disconnect.
That tension is key. And the sources also flag the volatility, right? The big price swings.
Definitely. Palantir is known for it. Very sensitive to news sentiment. Remember, early June 2025, the stock dropped, 13% in 2 days? Linked to CEO comments, news reports. But then it bounced back fast.
Shows how sensitive it is. That can be tough for new investors. What other risks came up?
Competition, for sure. The AI space is getting crowded. Google, Microsoft, lots of startups. Palantir is good, but it's a battle.
Makes sense. High demand, but also high supply of providers.
Exactly. Plus, the sources mention the ongoing privacy and surveillance stuff, mainly around government work. That can be a risk factor. And some international commercial sales actually dipped slightly.
Oh, interesting. And broader market stuff, like interest rates.
Yeah, Fed decisions, economic news, that always impacts high growth, high valuation stocks like this. Rising rates make future profits less attractive today.
This whole situation, the hype, the high price, the risks, reminds me of that ARK Invest example the sources brought up from 2022-23.
Ah, yes, that's a fascinating case study. ARK Invest, a big tech fund, sold Palantir shares in early 2022 when the price was around $10 to $13.
And then,
The stock dropped significantly after that, bottoming out below $7. But then ARK started buying back in May 2023,
at what price?
around $17. So they sold near the lows and bought back higher, just as it started its big run-up.
Wow. Even the pros find market timing incredibly hard. Sold low, bought higher.
It really shows you, right? Different views, difficult timing. It highlights the risks we're talking about now. Volatility, valuation. Nobody knows for sure.
Such a key lesson. Don't just follow the herd or famous names. Understand the fundamentals yourself.
Exactly. Okay, so pulling it all together, what's the summary picture from the sources for our listener?
Well, it seems like you have a company with genuine momentum, AI, government, commercial growth, that's real. Financials improving, the business looks solid.
But, and it's a big but, the stock price is reflecting sky-high expectations for the future. That means high valuation concerns and high volatility. The price can swing wildly.
So what's the takeaway for you?
Potential is there, definitely. But the risk is also significant because the price is already so high. It's sensitive, it could keep climbing, or it could drop sharply if growth doesn't perfectly match those huge expectations.
Key insights from the sources seem to be understand the business and the valuation risk. Don't just chase the price.
And manage your risk. Maybe consider strategies like buying smaller amounts over time, rather than going all in at once, especially at these levels. Be mindful of the price.
So it's that classic balance, exciting growth story versus potentially stretched market price.
Precisely. Potential is clear, but so is the potential downside if expectations aren't met or exceeded.
Which leads to our final thought. Given that today's price already seems to demand enormous future success, what would Palantir actually need to do to beat those expectations? And what happens if growth is just, well, great, but not quite the miracle the market seems to have priced in?
That's the million-dollar question, isn't it? Or maybe the billion-dollar question here. Something to really ponder if you're looking at this stock.
Definitely something to consider. We've explored the sources, the upside potential, and those significant risks around valuation and volatility. Hopefully this gives you a clearer framework.
Use this as a starting point for your own thinking.
That wraps up this deep dive. Hope it was helpful.